Good morning and welcome to your financial news. This is an update on the markets. Today is Tuesday, September 25th, 2018, and I'm going to tell you there's a lot going on in the news. First, we're going to start up the charts right here, and we're going to talk about Venezuela. Okay? There's an awful lot going on in Venezuela right now, and this is going to reflect back on the economy. One of the things I noticed is the United States is now talking about cutting off the sweet light crude to Venezuela. Venezuela needs to mix their oil with sweet light crude. They need to import it. And the United States, I can't remember where I saw the article here. I'm looking for it real quick. There's also the Chinese are right in there trying to get the Venezuelan oil. Now, you know there's a trade war going on between the United States and China right now. A very effective trade war. There it is. There's the article. It says, analysts say U.S. may ban light oil exports to Venezuela. The Venezuelan situation is heating up very rapidly. Now, what's really going on in Venezuela is it's been a slow-burning crisis developing in Venezuela for many, 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 many moons. In a long time it's been developing. And the Venezuelan people have been starving. Maduro, I'm telling you, he's got to be one of the worst. Or I don't even want to talk about him. He's so bad. Maduro. And I can see that a trend's developing here, and it's progressing. This is what I can see developing. It's slowly progressing, in my opinion, closer and closer to an invasion of Venezuela. It's the only way to save these people from Maduro. I mean, the guys, he's starving them to death slowly while he feasts. There's an article I seen here, and where is it? I'm looking for it. Where they're very upset with Venezuela because there's no food supply, first off, in Venezuela. The people don't have anything to eat. And evidently, Maduro is eating like a king. You know what I mean? While the people are starving to death, quite literally starving to death. Venezuela, here on this article, says can wreck United States-Chinese relations. Well, Chinese and the United States relations are already wrecked. Venezuela is going on the Chinese side, and Venezuela's got an awful lot of oil. So I can see a trend developing here. The trend I can see is an invasion of Venezuela. You know? And first off, look, right here, it says Pompeo, that's I believe he's Secretary of State right now. Pompeo promises a series of actions, and they don't say what it is. Now, this is the United States saying we are going to do a series of actions against Venezuela in the upcoming days. It's looking more and more like, see, it says the Venezuelan government right here is guilty of the worst human rights crisis in history. This is all pointing toward the United States having to step in at some point to stop this humanitarian crisis. So this is a trend I see developing, and you heard it here first. This is probably going to escalate into something where there will probably have to be boots on the ground to protect the people of Venezuela. Quite seriously. How else are you going to do it? You know, it's going to take boots on the ground in order to protect those people in Venezuela. I can't see any other way out of this. Now, that's just my opinion on it. But anyway, I saw that trend developing, and that's going to affect the economy in many different ways that we cannot begin to explore at this point in time. Now, let's take a look in the markets now and see what's going on. First, we'll start with cryptocurrency. Now, what we got here today with cryptocurrency is there's a little bit of a scare because there's a bug that the core development team had to fix, and the core development team apologized for the bug, and that's caused the price to fall from about 67 down to 63.97, or say 6,400. So it's caused a $300 fall. It seems like the price is stabilized today in Bitcoin. And so I think it could roar back hot again because it really didn't have that much of an effect, and the bug's been fixed. So, I mean, what are they complaining about? Let the price roar back, and I think it's going to roar back later today. So I'm thinking I might nip in and buy myself maybe $100 worth of cryptocurrency if I can. I'll see what I can do. Anyway, because tomorrow I think the price might pop up that much higher, you know. So let's take a look at cryptocurrency market capitalizations. What we're looking at is Ripple coming back down to 44 cents, which is good if you're out there wanting to buy Ripple. Ethereum's cheap right now at $2.09. I mean, $209, excuse me. Okay, I wish it was $2.09. Bitcoin Cash, $435. Litecoin, $55.13. Okay, so Litecoin, that's a good price for Litecoin, really. Okay, it's not as good as when it was $3.80, and I came on and I did a show on here, and I said, hey, you know what? You guys should buy a few Litecoins at $3.80. I said, but it's not financial advice at the time. You know? Anyway, they're $55.13, and I'm going to tell you that is going to seem just as cheap as $3.80 at some point in the future. Silver price today, we're looking at it heating up a little bit. 8 cents up, but we'll take every penny we can get when it comes to silver because it's been suppressed. It's been held down for so long that we'll take every penny that we can get. So it's $14.31. It's up a little bit, and that's good because I'm getting sick of the silver price being down so low for so long. Now let's take a look at the stock market. I'll tell you what, we're a little bit early on our program this morning. We were down 181 points yesterday. I don't think that the stock market is going to be, well, the volumes have increased. It looks like the volume, wait, hold, oh, no. I'm looking at the long-term chart. I was wondering, I was saying, well, gee, the volumes look like they're up, but no. I'm looking at the wrong chart here. We'd have to go back to like let's try a 1 month chart here, or three month here, you know. You see the volumes are still down, you know. Take it out to the 5 year. We have to go to the, let's try to, what were we on? 1 year. There we are, the 1 year. You can see the volumes. We had a little spike in volumes there, though. Look at that. But the volumes have been suppressed ever since 7th to 3rd. July 3rd. So the volumes have been suppressed since about July 3rd, coming across here. Low volumes. Anyway, what I expect the market to do today? Well, you know, the market's very unpredictable, but there's forces at play that don't look, anyway. Let's move on to the oil price today. 72.44. The oil price is high. This has to do with things like what happened in Iran. There, they had a terrorist attack of one form or another. That had a positive impact on the price of oil, along with the OPEC meeting, which had another positive impact on the price of oil. So this is holding the oil price up, and the oil price is relatively high for sweet light crude. That's pretty good little price right there. Now let's take a look at bonds and rates today. Bonds are on the move upwards, and this is what I've been expecting for a long time. The 10-year is up to 3.1% again. And here's the thing. I'm expecting maybe a few little dipsy doodles down the stuff, you know, but I'm expecting overall these rates to climb. And I'm going to tell you, I think that this is the last rate hike. I'm going to go out on a limb a little bit with that, but I think this is going to be the last rate hike from the Fed. I think that this last rate hike of 25 basis points that they're going to do is going to throw everything into I think everything's going to go topsy-turvy, and I think that they're going to have to come back down to zero or even negative interest rates. You know, the Fed, and they're going to have to come into new stimulus programs. Bigger and bolder than we've ever seen before, because I think they're going to create a crisis here. And very soon, I think we're going to head into this crisis. Once the U.S. 10-year goes over 3.25%, I think we're going to go into this crisis. And I think that that's only within the next couple months. I think we're right on the verge of going into a massive crisis that is going to lead. What this crisis is going to lead to, it's going to lead to a real economic recovery. You heard me right. And this is when the price of gold and silver are going to break free from the restraints that they've had on them for all of this time. When the economic recovery comes, people are going to flock to gold and silver. The sentiment's going to change. It's going to be massive, the increases in price in gold and silver when this economic recovery comes. The economic recovery is going to be caused. Now, see, to understand why we're going to have an economic recovery, we're going to have a very short-lived crisis caused by the Fed, induced by the Fed. What's going to happen then is the Fed's going to change monetary policy. And you remember in 2008, we had the exact same thing. This is going to be a repeat of 2008. Very, very similar to 2008, except a little bit more severe. It's 2008, they shut it down. They poured the money in before it was, they smoothed it over really quick. This one's going to be a little bit more powerful. It's going to have a little bit more energy behind it than the 2008 one. But they're going to shut it down too, just like they shut down the one in 2008. And the one in 2008, the deflationary spike event in 2008, which they call the economic, they call a recession of 2008. They always call it a recession. It's actually a beginning of a depression, but they call it a recession. The recession of 2008 that they shut down, this one is going to have more energy, more negative energy. And so it's going to require more stimulus to shut it down, but they're going to shut it down. And when they do that, now the last time this happened back in 2008 and they shut it down, that stimulus that they put in almost made an economic recovery. And in fact, they were touting an economic recovery to all the people. They were saying, look, we're in an economic recovery, in all the newspapers and everything. That's because we were so close to an economic recovery that they could say we were in an economic recovery. This time, the stimulus is going to push us over the edge into a real economic recovery that nobody can deny that they're not going to be able to say, oh, gee, we're not in an economic recovery. This is going to cause a real economic recovery. When that happens, the credit that was drying up, right now credit's drying up. I mean, the people are not borrowing money like they were. They're saturated already. They've borrowed. But when this economic recovery hits, the velocity of money is going to go poof through the roof. The banks are going to start lending money out again. And what we're going to see is a heating up of inflation that the central banks cannot stop inflation. The central banks, they can do any amount of stimulus to stop deflation. So this little crisis we got coming, they're going to hit it with everything they got to stop it, because it's going to be a deflationary crisis like the 2008 event. They can stop that. Their money creation tool can stop that in its tracks. That's why Ben Bernanke got the nickname Helicopter Ben, was because he was basically telling everybody, he said, listen, we as a central bank can stop deflation. If he said, if we have to, because when he said it, he was trying to prove a point. He said, if we have to, we will dump money from helicopters. And he meant it. He meant it. They will print up a billion trillion $100 bills and dump them out the window of a helicopter, and that will stop deflation, because deflation is when people don't have enough dollars. Or right now, the Fed's draining $50 billion a month of dollars out of the system, and it's creating a shortage of dollars. This is what's supporting the dollar. Okay? So, but when the Fed is forced to stop that, to stop doing that, and they're forced to move in the opposite direction and dump tons of new dollars into the system, and then the banks start lending out money as well, because an economic recovery begins, why then the velocity of money will shoot through the roof. And at that point in time, you're going to see gold and silver, they're going to go crazy. Because the people at that point are going to start to see the inflation, really see the inflation, and they're going to start to lose confidence. They're going to start to say, hey, you know what? Why am I keeping my money in the bank when I'm losing 10% a month? Then it'll go up to 50% a month. Then it'll go up to 100% a day. It'll just be a panic to get out of fiat and into something that's going in the opposite direction. Something that's going in the opposite direction is going to be gold, silver, and cryptocurrencies. This is going to be rocket fuel when this economic recovery comes. So for the first few months of this economic recovery, everything's going to be wonderful. It's going to be roses and sunshine, because it's going to be the first economic recovery we've had in ages, when the Fed opens up the gates of money and lets the money flow. Because right now they're being tight with the money. They're not giving it, in fact, they're pulling it out of the system for themselves. So this is going to be a opening up the floodgates of money to the people. And what this is going to lead to is going to lead to superinflation, inflation like we've never seen before. And that's when your gold, your silver, and your cryptocurrencies are going to go to the moon. All of them. The dollar's going to go to hell at that point. It's going to be a reversal of fates. And if you've positioned yourself right, you're going to make it wonderful. If you haven't, well, you're going to be in a mess. Okay, so now let's take a look at the U.S. dollar index. 94.07, you know. It's been slipping a little bit, but the Fed withdrawing $50 billion of liquidity out of the market every month of dollars, and the emerging market crisis getting underway, and considering that the dollar is a basket, it's in with a basket of currencies, and these other currencies are crap. The dollar is the best looking one of the bunch. It's like, what's it being weighed against for this dollar index? You know, if you were weighing the dollar against something good like gold, it wouldn't be 94.07, but it's being weighed against other crap, crap that's worse than itself. So it's that's the thing. That's why it's at 94.07, and that's why it's staying strong. But this is all a manipulation to keep the dollar strong. They're going to do it as long as they can possibly get away with doing it, until they can't anymore. And then they're going to panic, you know. Listen, thank you guys. I know this has been a little bit of a long market report this morning, but thank you guys for listening. I really enjoy you guys' support. And on both of my channels, if you haven't subbed over at the my other channel, which is called the Delta Report, just go into YouTube, type in the Delta Report. Go over there, sub to my channel over there. I really appreciate it. That's a crypto channel. I talk about crypto, and every day I do a report on crypto over there, just like I do a report on the what's going on in the financial news over here. I keep my eye on developing trends. This is the thing. In cryptographic, I keep my eye on developing trends, and I also keep my eye on developing trends here in the financial world, what's going on with trends that are developing. So thank you guys for listening, like and subscribe, and we'll catch you guys in the next show. Bye-bye for now, guys.